FBN Holdings, one of Africa's largest diversified non-operating financial holding company, hosted its 7th annual general meeting in Lagos. It was an opportunity for the board, led by Chairman Dr. Oba Otudeko, to engage shareholders on the 2018 financial year performance. External auditors and the Statutory Audit Committee, in their separate reports, gave FBN Holdings a clean bill of health on its financials.
FBN Holdings PLC's consolidated and separate financial statements comprise 1. The consolidated and separate income statement for the year ended 31 December 2018, the consolidated and separate statements of comprehensive income for the year ended 31 December 2018, the consolidated and separate statements of financial position as at 31 December 2018, the consolidated and separate statements of changes in equity for the year then ended, the consolidated and separate statements of cash flows for the year then ended, and the notes to the consolidated and separate financial statements, which include a summary of significant accounting policies. Basis of opinion. We conducted our audit in accordance with International Standards of Auditing, ISAs. Our responsibilities under the standards are further described in the auditor's responsibilities for this audit of the consolidated and separate financial statement sections of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide the basis for our opinion. Our independence. We are independent of the group in accordance with the International Ethics Standards Boards for Accountants Code of Ethics for Professional Accountants, IESBA Code. We have fulfilled our other ethical responsibilities in accordance with the IESBA Code.
We have reviewed the audit report for the year ended 31st December 2018 and hereby state as follows. The scope and planning of the audit were adequate in our own opinion. The accounting and reporting policies of the company conform to statutory requirements and agreed ethical practices. The internal control was being constantly and effectively monitored. The external auditor's management report received satisfactory response from management. The committee reviewed the audit report on insider-related party transactions and is satisfied with their status as required by the Central Bank of Nigeria.
Some of the shareholders in their remarks commended FBN Holdings for paying 26 kobo dividend despite an improved performance amidst a challenging macroeconomic environment.
The question of happiness is a subject issue. When you are abreast with the working of an institution, you will then be able to appreciate the problems that the organization is going through. So if you appreciate that, and if I have to appreciate that, I am happy with the dividend, because otherwise there wouldn't have been any dividend. And also, I'm very much aware too that there is the prudential guideline which says that there must be provision here and there. It's still operating. I'm also abreast with IFRS 9, which is very punitive to shareholders, but at the end of the day, that's what the regulators are saying we should do. IFRS 9 provides for everything. So if you do not want to take it in a segment of 4 years, you want to take it once, then definitely it will hit the profit and loss account. Better still, the major problem is that whatever we have seen today do not have the input of the commercial banking. Whatever is being paid out today, it's just two sectors that provided the profit that we are paying from, which shows very clearly that there is hope for our investment in First Bank Holding. So, and these two sectors are the insurance and the merchant banking.
The board and management has been very resilient. They have changed their strategy on risk management. You can see that the NPL ratio for the past 3 years has been very minimal, less than 1%. so they are not increasing their NPL ratio. So I am sure with the diversification, with the African business expansion they have done, with the subsidiaries that are contributing a lot to the balance sheet, I'm sure next year the management would raise their heads high because shareholders will be happy with the profitability they are going to post.
Responding to the shareholders, the MD CEO of First Bank, Dr. Adeshola Adeduton, assured shareholders that the financial institution will double recovery efforts on all the provisional accounts and leverage its agency banking, digital banking service, and ensure efficiency in the IFRS 9 provisions.
I want to assure the directors and the shareholders that recovery effort on all the accounts that have been provisioned, they are in progress. We will ensure that no kobo that belongs to our bank is left in the hands of third party. Let me also assure that what we call the vintage NPL, which is the NPL on loans that have been created since we strengthened and revamped our risk management process, which we put at 0.3. We will remain very disciplined. We are embedding that new credit culture to ensure that on a going forward basis, we keep the lead on NPL formation, while we keep on working very hard to resolve the legacy NPL. So if there's anything we would like to assure the shareholders is this is one area of our business that we have our hand fully wrapped around and we are dealing with it squarely. The comment on the agency banking is very well noted. As at the time we prepared the annual report, 15,000 agents, we have them all over the country, covering the entire 774 local governments that makes up the Federal Republic of Nigeria. Let me also inform you that between then and now, the number of agents has inched up to 20,000. And indeed, as at the end of last week Friday, we reached a very important milestone. We've processed 1 trillion transactions on our agency banking platform.
The Group Managing Director of FBN Holdings, Mr. UK, also informed shareholders that FBN Holdings was in a stronger position in 2018 financial year than in 2017.
I think I would like to start by appreciating the comments and contributions of shareholders. For me, more than anything else, it confirms your loyalty and interest in the growth of our great institution. Let me say, secondly, that I am sure and certain that the brand you handed over to us to manage is in a much, much stronger position at 2018 than it was in 2017.
Mr. UK, Dr. Adeshola Adeduton, speak further on the FBN Holdings financials.
We took the shareholders through on 2018 performance, and we left them with a message that the entire group is in a much more stronger position at the end of 2018 than it was in 2017. And the evidence is very clear. We also confirm that we are building a fortress balance sheet, which means from the capital perspective, we have all the operating entities well capitalized, and we didn't have to go to the market to raise capital for that purpose. Two, from liquidity perspective, we're in a very strong position also across the operating entities. And interestingly, as we reported, all the operating entities are reporting very positive numbers. As we announced, the merchant bank and asset management group yielded about 28% of the PBT numbers, whereas insurance gave about 9%. So that shows the diversified earnings base. But going into 2019, we did say that we're going to reopen the lending and then we expect to grow by 5%. Last year, we did not really grow in terms of loan book, and yet we reported PBT at the level we did, largely on the back of growth in the non-interest income, largely electronic banking. So you're going to see more of electronic banking income, the non-interest income, but more importantly, as we open the taps with respect to the loan book, there will be a lot more income coming through. So this year will be better, obviously, for the shareholders.
You will recall that about 3 years ago, when we were at Zoom office as the new leaders of the group, part of what we said to the investors community is that we are going to diversify the earnings base of the institution. We committed to making significant investment in our electronic banking platform and solutions, and that is beginning to pay off. Today, we are the clear leader in that space. We have over 10 million people actively transacting on our first mobile platform and on our USSD star 894 platform. So for us, we are just starting, and we believe that the future is actually even brighter than what we are seeing today.
You talked about the loan book, and you've talked about addressing the legacy loan issues, which of course you've been commended. So which sectors are we going to see grabbing the attention for loans, considering what you've learned to address in the past?
Okay, so the good news is that the economy is opening up. Last year, across the sector, across the industry, I'm not sure that banks took interest in growing because macro wasn't really very supportive. But as government begins to take interest in reflecting the economy, and as we project growth, whether it's 2% or 3%, there are opportunities across the various sectors. Key for us with manufacturing, driven by government support to that sector. And again, central banks' deliberate effort to promote real sector growth. And I believe the availability of FX has helped to a large extent, ensuring that inputs are sourced. And of course, we anticipate higher purchasing power on the back of increase in minimum wage. So purchasing power will grow, and therefore general commerce and the retail space will also be of interest to us. We do think that we're going to expand very significantly the retail bucket because the conditions for growth are beginning to emerge. And we also do think that agriculture is a very good attraction for us. Government is so supportive. Central bank, through the Anchor Borrowers Program, and a few other incentives that have been introduced in that sector, they make it compelling for banks to take interest. And we have always been very interested in that sector, if you look at the track record of First Bank. So I think we would be very deliberate in choosing the sectors we play in. More importantly, we'll be very deliberate also in choosing the obligors, because quality at entry is very important. There's a commitment to a single-digit MPL 2019 year end, and we believe we're on the right path. Why do we say so? If you look at the vintage MPL book, loans made out in the last 3 years, we've been on 0.3 over the last 2 years. So that speaks to the robustness of the risk environment from people, process, and technology perspectives. So we've basically built strong protection around the loan book, and we do not think we're going to see significant changes in 2019. So we are committing really to supporting the real sector. We are committing to supporting the retail borrowers so that nobody is left out as the economy begins to ramp up.
With a 19.7% increase in profit before tax, which translated to 65.3 billion naira in 2018, compared to 54.5 billion naira and payment of 26 kobo dividend, FBN Holdings is showing that commitment to creating value for shareholders with an ambitious 2019 target of bringing its MPL to a single digit.